Hey guys, Jason Hawkins, Lightpath Wealth Advisors. I wanted to share with you a little exercise this evening that I ran through today with a potential client. Now, I'll give you the quick rundown on this client. They're in their early 40s, both of them working professionals. They have a handful of IRA accounts that they set up over the years, and 100% of their assets are invested in this 2030 State Farm Target Fund. Now, even though we don't recommend mutual funds or target funds for several different reasons, as you'll find here today, but we're oftentimes asked our opinion or thoughts on these types of investments. So what I did with this particular client is I ran them through this exercise that I'm going to share with you today. So the first thing I did was I identified the ticker symbol of the target fund so that I could go out and went into Google, pulled up the NLHAX so that I could get a chart on this particular fund. Now, I usually like to start out looking at the max number of years that they have available, and in this particular case, the chart went back 12 years, all the way to 2006. Now, one of the first things that jumps out at me is the downward trend that was experienced in 2008 and 2009. Now, as you can see in looking at the chart, that this particular fund lost nearly half its value over that very short time frame. Now, this is important for you as an investor because you always want to understand what your downside risk or exposure is with your current investments. So, if you're not comfortable with a 50% setback, I would not suggest investing in this fund. Now, the next thing that really jumps out at me is the performance, or lack thereof, over this 12-year stretch. Now, in 12 years' time, the growth went from roughly $14.50 to $16.50. So this represents approximately 15% growth over a 12-year time frame. And the reason that this is so alarming is because we have been in a very bullish market over the last 9 years. So at the very least, if your downside risk is similar to what you have in the market, you want to make sure that during the up years that you're also keeping pace with the market. So definitely something to look at. Now, the next thing I want to show you here is the chart on the market, the S&P 500. Now, again, this is not a 12-year chart. This is a 5-year chart. And what I wanted to do was compare the prior 5 years of the market to the prior 5 years of this particular target fund. Now, as you can see, in the past 5 years, the market has nearly doubled in value from $1,500 to really it's reaching close to 3,000. So that is an incredible run over the last 5. Now, but the thing that's alarming is when we go back and we look at this target fund over that same stretch of time, that same 5-year period. Now, what you'll notice here is that it does not come anywhere close to doubling in value. If it were, if it were to have doubled, it would have been somewhere around $27 to $29 per share. And as you can see from looking at the chart here, that this particular fund has never exceeded, or at least in the last 5 years, has not exceeded the $17 per share. So, as you can imagine, after running through this exercise with the client, they're not particularly high on this investment, and we're definitely going to help them with repositioning these assets into something that would more closely align with their goals and objectives. But anyways, I just wanted to run you through that exercise. I hope that you found that to be helpful, and if you have any questions about this video or your own personal investments, please don't hesitate to give us a call. We'd be happy to sit down with you and help you run through this exercise, or if you find that your investments aren't meeting your expectations, or that the current risk or exposure that you have with your investments is much greater than what you had anticipated, we'd be happy to help you with repositioning those assets into investments that would be more appropriate for you. So thanks for your time. Have a great evening.